You can change the world. Learn from proven change makers from all walks of life. They'll show you how to raise money, invest for impact, and so much more. You can start small, start today, and never quit. You can change the world by strengthening your superpowers. Now, welcome to the Superpowers for Good show. I'm your host, Devin Thorpe. Great to see you here, everyone. Thank you so much for being here. We've got with us today compassionate capitalist Karen Rands. Karen is an author, speaker, and advisor to angel investors, often helping them focus on supporting social entrepreneurs and women founders. So please help me welcome Karen to the show today. Karen, welcome. We're thrilled to have you.
I'm thrilled to be back, Devin. This is really exciting because, it's been a whole new brave world that we're living in since the last time we spoke.
That's right. That's right. Things are changing fast in this investment climate that we're in. Karen, tell us about your work and the things that you're up to in your books, and help us catch up a little bit, if you will.
So actually, in fact, since the last time we spoke, I've had these aha moments of discovery on my own journey that has really equipped me to accomplish the mission that I have set out to do. And that is understanding, I worked with angel investors and entrepreneurs for 20 plus years, running my angel investor group, preparing companies to pitch at dinner events, boardroom events, big events, and to pitch their opportunity to the investors that I had invited into the room. And along that way, I thought I really understood about angel investors and what motivated them and how they got to where they were and the best practices for entrepreneurs to be able to get access to capital. And hence why I wrote the book in response to the Jobs Act, because I felt at the time that there was a gap in the education for people that were motivated to become angel investors to learn how to do it with, competence and confidence. And I didn't really appreciate was why so many people didn't know about angel investing, didn't know about even now today crowdfunding investing, were heavily dependent or had this perception that real estate and stocks were the way to create wealth. And I really didn't understand why the laws prior to Jobs Act contributed to this lack of awareness and even a negative connotation for investing in entrepreneurs. And I set out to solve that problem first with the book, then with my podcast to be an amplifier, and now with my digital course that really intended to take it to the masses, to really make it accessible to just about anybody to be able to invest in entrepreneurs that want to.
Well, this is such an important thing to really address because I think there is this, you hinted at it, this negative connotation. And I think it grew out of the idea that the way investments have been governed for the last 80 years until the Jobs Act was that you couldn't invest unless you were an accredited investor, which sent the implicit message that ordinary folks who aren't well off aren't smart enough to do this, right? It's too dangerous. And how do you explain to ordinary folks that they're smart enough, that it's not too dangerous? How do you help them come to terms with that?
So that is a good point. I think that is I would say that is the additional fuel on the fire, if you will, of this misinformation. Um, and that's kind of why the SEC took so long out of the main articles of the Jobs Act, Reg CF or Reg crowdfunding, that is most like reward-based crowdfunding, was the last to get its guidelines. And in part, it was this perception that the folks that are making 100, 150 grand, less than 200 grand, don't have the same savviness. And because on the opposite side of that, when the super wealthy in the 1930s the Rockefellers, the DuPonts, the Gettys, the people that were the industrial magnates that were building the United States. The reason why there were security laws preventing other people, regular people, really the laws were about entrepreneurs not being able to solicit capital from anybody they didn't already know and was a millionaire. And then they defined that as accredited investors. But if they didn't already know them and they weren't already a millionaire, they could not raise capital from them. That was really, and there was carve outs and exceptions and small bits of things where you could have 30 investors or something that weren't. But it was because when they put all the security laws in for public companies as part of the Great Depression response and the collapse of the stock market, the super wealthy said, hey, we're doing all these deals together. We don't want you looking over our shoulders. So let us not have to adhere to all those other rules. And those became the carve outs of the Reg D offerings, the Regulation D offerings. And so what you had happen in the 80s, okay, in the 80s, things changed because real estate, you can map investing in entrepreneurs under the Jobs Act and the doors it opened up very similar to real estate because prior to the 1980s, and even this is kind of goes into where my passion comes from, it wasn't until 1984 that women were by a Supreme Court decision allowed to get any form of debt in their own name. Prior to 1984, women had to get a husband, father, son, brother, uncle, any man to co-sign or sign up for them in order to get a loan, even a Macy's card or a business loan or to buy their own house. All right. So there was a limit, and then that got removed. And about the same time, the rules about how investment in real estate changed. You had the ability to deduct your expenses. The banks had provided more capital or provided more lenient terms where you didn't have to come to the table with 50% down. And it became an asset class that people would strive to be in that weren't already super wealthy or, institutional type of money. And then we got the cottage industry growing with that. But what you had during that time were financial planners and the people that normal people would go to say, should I not invest in this? They would come and they say maybe somebody they knew was starting a business or somebody from their company was leaving to go start a business, or they saw something, they met somebody and they were affluent, and they would come to their financial planner and say, hey, I'm thinking about investing in this business. What do you think? And the financial planner would say, now, we talked about real estate because they could advise them on real estate because it wasn't considered a equity asset, from stock market and stock equity. And they would say, you can invest in that. And we talked about how much you can allocate. But when it comes to investing in on this private company, oh, no, 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 that's gambling. There's no assets there. That's really, really risky. You need to invest in these things that my company offers. They couldn't say that they weren't allowed to advise them on that because that would look bad on them. They had to make it look bad as an asset class because the only thing they could advise are the things they were making commissions on. It's called selling away. It still exists right now. And so 30 years, 80 years, so just through real estate since the 1980s, that has become part of our ecosystem of language. And so people parrot that and repeat that until everybody kind of believes that investing in entrepreneurs is super, super risky, even though most of our collapses in the marketplace have been a result of our financial or economic malaise, the collapse of real estate or the collapse of the stock market, which oftentimes have nothing to do with the individual value of that investment that that person made, but they can lose everything. And in fact, that's what the Jobs Act did. It was reversing the effect of the collapse in the Great Recession and allowing people to be able to not only raise capital outside of the traditional means of angel investor groups to VCs, but also for everyday people to be able to invest in those companies the same way they had been putting money into reward base to launch companies but never received any financial benefit from putting that money into those companies pre-equity crowdfunding.
It really is fascinating stuff to think about, and I just get excited. I think you and I are in so many ways kind of kindred spirits. The way we think about these things. As you think about this, how do you coach people to approach the start? Right? How do you coach people to make their first investments? What are the tactics and strategies you coach them to do?
Okay, so I launched my digital course. That's the companion to the book, Inside Secrets to Angel Investing, wherever that is. And because it really was a how to, but you know how people are, they don't, buy a book and they kind of sits on a shelf. And so I brought that to life with this digital course. That's the Compassionate Capitalist Wealth Maximizing System. And there's an intro course in it. And the main thing that I tell first they have to do is identify what they know. I have a spreadsheet that with the help of the federal government will become an application that people can use on their phone. But they have a spreadsheet that they fill out that what do you know? What do you know from your work, from your education, from your hobbies and industry? So the first thing, just to be like Warren Buffett, invest in the things you know. So and you're passionate about, and there's a problem that you wish you could see solved. And that's the first thing. The second thing is to figure out how much money do you have to invest? Look at your disposable income, where you might have other investments. Maybe they saved up a bunch of money for a real estate investment, but they've been shut out by the high rising costs and interest rates. And they can then they find out how much it is. And it may be, because they want to be able to do 10 investments over a period of time, ideally 2 to 3 years. And they need to figure out how much do they have to invest over that period of time. And it may be $500 in, multiple companies, or $5,000. If they get a bonus from their work, they might want to allocate that. There's lots of different ways that they may determine how much they have, but they go through that process. And then the goal is I teach this concept called the Angel Profitability Blueprint. And what we want is to identify 3 or 4 companies that are going to produce income, like a rental property, and then different types of structure, short term, long term, and then the ones that potentially have the big wins to go public or, sell their company in the future, and have a strategy to be very specific on how you find them, how you look for them, evaluate them, and build your portfolio of 10 companies.
Well, it really is, I think, such an important concept to help people make their first investment. Frankly, if I'm going to be honest, I'm a little reveal a little bit about myself, but I remember writing and talking about crowdfunding, investment crowdfunding, for a long time before I did it. And now I've made dozens and dozens of investments. I'm a very experienced investor, and I came, despite the fact that I said it took a long time. The reality is I had done angel investing before, because in an earlier life I was accredited and doing well and making those kinds of investments. So I wasn't naive, and yet it still was a big hurdle for me to make my first solo investment. And so I think it's just vitally important, the work that you're doing, to try and help people make that first investment. Well, listen, we're going to take a little break here, Karen. And when we come back, everybody, let me reintroduce Karen. Karen is a compassionate capitalist, an expert on angel investing and investing via crowdfunding, and just a fun, delightful person. We're having a great conversation. But when we come back, we're going to talk to her about her superpower. So stick around. You don't want to miss this conversation.
Hope to raise money from the impact crowd. Good investors are as interested in community, social or environmental impact as you. Connect with Funding Hope, an SEC-registered FINRA member crowdfunding portal, to learn how to raise capital from the impact crowd. Scan the QR code now.
Join us for SuperCrowd 24 for 2 full days of wealth and impact creating content at this virtual conference on April 17th and 18th. We'll have 100 speakers and live pitch sessions. Learn how to invest like a pro and raise money from the crowd. Save 50% with the discount code SUPERCROWD at thesupercrowd.com.
You can get in on the ground floor to help fix the climate crisis for as little as $100. Pause now to scan the QR code to get started, or visit s4g.biz/raisegreen. You can be a green at Raise Green.
Welcome back, everyone. In a minute, we're going to talk to Karen about her superpower. I'm here today with the amazing compassionate capitalist, Karen Rands. And before we jump into that, though, I want to take just a minute, Karen, to highlight the fact that you'll be speaking at Supercrowd 24 on April 17th and 18th. It's going to be a great event. You're also doing some mentoring to help prepare the companies that'll be doing a live pitch. We're just thrilled to have you involved in Supercrowd 24. Tell us why that's something you're willing to invest time in doing.
Oh, well, I mean, that's an easy one to answer because, you know, when after we first met and we started and I realized what you were doing and all the people around, and, really you can't create a community if you don't have events where people can come together and get to know each other and learn from the footsteps, the mistakes, the positive things, what they learned on all of their different journeys. And when I participated in the Super Crowd 22, I think it was, um, I was blown away. It was so powerful. Sometimes you get on these conferences, particularly if they're virtual, and you're like, well, I'm just going to pop in. I'm going to do this stuff. I was engaged, meeting people, listening people, learning, all this. Every minute of it I was, and I hated that I was not able to participate in last year's because of a scheduling conflict, and I'm really excited about being there today and can't imagine just watching the ads that you just showed. It gets me excited because there is just so many ways for people to participate in this. And as I say with my course, once you do what the main reason and the whole reason why compassionate capital is what it is, right? Yes, you want to make money, but you're doing it. And the reason why angel millionaires have invested this way for so long, even though they could invest in anything they want, it's because they have a passion about what the company is doing. So when you invest in entrepreneurs, particularly Reg CF companies, you're investing for passion, purpose, and profit. And those things that you just showed on your ads were right in line with all of that. And everything that you're going to do at Supercrowd is right in
Yeah.
line with that.
Well, fantastic. I'm so appreciative that you'll be engaging with us. Thank you so much for joining us for that. You really have had a stellar career, and you're author of a best-selling book, and it's just wonderful all that you've accomplished. What do you see as your superpower?
So I would have to say that it's the why an investor cares, the WIC statement. So I came up with this idea back when I was running the angel investor group and helping these companies. And every time, whenever you have a mismatch between entrepreneurs and they're out there trying to raise capital and they can't seem to get the interest and the attraction of the investors like they want. And some people call it unique value proposition and unique selling. We're like, what, but to me, I call it a WIC statement, why an investor cares, or elevator pitch, whatever it is. But all too often, entrepreneurs fall in love with the problem they're solving because it's a problem that they relate to. And they focus on what they are doing, not really the benefit of what it's going to solve in the problem and why an investor cares about that problem, and of course, how the investor is going to make money on it. Like, what's the end game? Where are you going with this? How do they get their money back out of what they've done to do it? So it really comes down to, I have a secret power, like the ghost whisperer, if you will, or the elevator pitch whisperer. I can really help entrepreneurs cut through their own noise to get to the sweet spot of what an investor is going to care about. And then when they understand that, and then it kind of helps them understand their avatar of who the perfect investor is, they're able to laser in to say the things that an investor wants to hear, that wants to learn about that opportunity to invest in it. And so it's really getting through that, getting out of their own way to understand where the headset of the investor is, to want to invest, to want to stroke that check of their own money into that company, versus because they're competing with everybody else that's raising capital too. So it's like they have to be able to cut through that noise with a why an investor cares statement.
That is really a super power, because it is such a challenge for entrepreneurs. I faced this when I was doing my crowdfunding raise last year. It is hard to develop a genuine connection. It's a sort of form of empathy, right? To be able to feel what an investor is feeling and to be able to communicate to them why they should invest. And so having that skill, that's profoundly important. Can you think of a specific example that you like to brag about where you helped a particular entrepreneur perhaps raise capital by defining that WIC statement?
Well, I can use it as an example of a company that um, they circled around my ethosphere a bunch, and this is early on when I was just learning my own say of what makes an investor want to invest in a company. And so this company was marketing themselves as a like a super duper surge protector. The idea was it could anticipate when there was lightning strikes based off, and this is 20 years ago. Okay, so it's anticipate lightning strike, and because there's towers out there that I guess do that, and then they warn. There's an early warning system or something that in some miles away from these things, and it would anticipate that and then send an alert. The way they originally set it up, it would send an alert to the electrical company to notify the businesses so the businesses would turn their stuff off. Right. And so it was to me profound technology. This is really amazing because they talked about all the stats of computer equipment and everything that people, insurance rates and things because people have these things that happen. And they had come through my investor group or were coming and I saw him at a big conference and I'd seen him someplace else. I was excited about him. And I asked one of the investors that I knew that was part of my group, so what did you think of that company? Why did you like it or what? He goes like, oh, no, no, no. They don't even know their marketplace. And I was like, what do you mean? He was like, why would an electric company care about that? They don't give they still get paid whether somebody's equipment went down or not. The person that cares about it is the business owner. I was like, "Oh," so understanding who cares about the problem you're solving, I was like, "Oh, right." So they bounced around. Then they paid a bunch of money to this finder to come in and pitch, and get them meetings with investors. And he had come through, and it was sad to me that he did not fix them because I respected this guy as a guy that knew how to raise capital because he had been successful at raising capital. He was a licensed broker dealer and he didn't change their business model at all. And so fast forward like 5 or 6 7 years later, they were at this inventors association I was a part of, the inventors talking about their journey of raising capital because now they were in business and they were making money and all of this stuff. And pulled them aside and I said, what changed back then? You did that. They said, we figured out that our customer was the business owner or the individual, and we didn't want to do consumer products, but we knew that was really what we had. So we went out and formed a joint venture with one of the big surge protector people to integrate their technology in it. So it would send a cell phone signal to the business owner that there was an imminent lightning strike and they would go in and they could turn off their stuff. And I was like, they pivoted, but it was what that investor saw from the very beginning. And that was when it was like this aha moment that I always ask, put it through that same filter, and so I ended up doing that with other people, and I do it on the fly a lot of times networking,
Excellent.
like, but
Excellent. Take 30 seconds and give us a tip for learning how to do this. How do we learn the WIC process?
well, it's really who's willing to pay for it. And you have to talk to customers. You have to talk to real potential customers on who's going to pay for it and the problem that they're solving. And if you don't have the ability to do that, then you've got to rethink what it is that you're doing. Is there really a value that people are willing to pay for because you're solving a problem they have? And if that happens and that market's big enough, then investors will want to help you solve that problem by being your financial partners.
Excellent. Excellent. As we wrap up now, take a minute and tell people how they can learn more about you, your books, how they can find them, how you can get your course. Give us the whole rundown here. You got about 60 seconds.
Okay, well, everything about my services that I do for entrepreneurs and investors, the book, all of that is at cougarand.com. It's the same as my name. If you don't know how to spell Cougarand, you can go to karenrands.co. I'm sure it's all in whatever show notes. But the big thing I want to offer to the audience is to go check out the intro level to getting started investing in entrepreneurs as a crowdfunding investor or an angel investor. And you can just go to dothedeal.org. Dothedeal.org. It's really simple. I had and in the spirit of Super Crowd 24, I'm going to give all of your audience that does this a 24% discount off, and it's just Super Crowd 24, and you'll get 24% off the subscription service for the annual on that if you decide to sign up for the class. And it's currently 25
Fabulous.
lessons and more to come on a regular basis.
Well, Karen, thank you so much for taking the time to be with us. Thank you for that generous offer, that generous discount for the community, SuperCrowd24. It's my favorite discount code ever.
I know.
Thank you very much. We look forward to seeing you in a couple of weeks at SuperCrowd24. It's going to be great. Thank you so much. We wish you every success in the great work that you're doing.
Okay. Thank you so much, Devin.
All righty. Let's do some good.